Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Oh my gosh, I'm not. You know, I've been thinking in my head a lot this morning, and I just kind of got caught drifting off there during the intro. How's it going, guys? I hope that you did well yesterday if you traded. It was all kind of a pretty crazy day. Let's go look at this in the charts. Okay, so well, let's start with the S&P 500 because that's the most interesting here. People anticipating the CPI news, buying the day before, some suspicious activity before the news, and then on the release of the CPI, as expected, huge spike in the markets. But as the day went on, we saw a lot of selling. There was a lot of reporting yesterday about what might be causing that selling. I thought it was very interesting, but I think a lot of it does have to do with the fact that there is an FOMC meeting today. And maybe some people thinking, well, you know, this is probably as good as it gets in December. So maybe you just take profits. All right. So completely came back in ES. The treasuries actually held the gains to some extent, although we are seeing some downside here this morning. Right. Oil generally pointed up. Gold and silver spiked good on that and held most of their gains. Gold more than silver though. Kappa, like the equity indexes, gave it all back up. Then we come over here. Bitcoin, of course, seeing a huge spike on that. But the dollar, it took a big hit and is still down below 104. So where does that put us? Well, I don't know if you really want to be putting on huge risks here ahead of the Federal Reserve meeting. Now, the Federal Reserve meeting could go a couple of different ways, right? I do think that there was some signs of deflation in that CPI report, and I'm going to bet that Powell will address that. Whether that will be net bullish or net bearish after everything is said and done, I don't know. But I do think that he's going to have to speak to that. We are going to get the dot plots, which is going to be interesting. I tell you what, man, yesterday, little segue here. It snowed so effing much here in Utah. I went out, I think, at least 4 times and shoveled 6 inches of snow off of my driveway. and there's still more this morning, although not nearly as bad. So I'm pretty tired. It was hard to wake up this morning. So I think this morning that we just take it easy. All right. And save our energy for this Federal Reserve meeting and see where we go. Then maybe in the aftermath of that, we might get a more clear direction of where things are going to go. But to TLA traders' question here, is it a limit day, down day, and ES down? No. These moves, I think, are not all that unusual or concerning, right? When you get a really big move up on something like a CPI, for one, it creates a massive liquidity hole behind it. So that makes it easier to retrace the move, right? Since so many people anticipated this and got it right, that's going to be a lot of profit taking. That's also going to make the move retrace. And there's still a lot of people that are bearish out there. And so they're going to try and take advantage of that kind of action, play some defense and try and shoot it back down the other way. But I don't think that any of these moves are too far outside of like normal behavior for an event of this kind. So I really do think that we can just kind of sit tight and wait for the FOMC and see what happens, right? The FOMC is if like Powell comes out and is like hyper hawkish, then we could have a problem, right? Back to your usual ZN contract order. Well, there's still a lot of volatility, man. And we're still putting up 700s at some prices, so the liquidity in ZN still a little light this morning. So I was a little preoccupied this morning because I was thinking about a TikTok comment that somebody made that I thought would be a good opportunity to like, you know, make a video. Well, so this person said order flow is useless because institutions use both sides simultaneously. So, you know, what he's saying there doesn't exactly make sense, right? That kind of suggests to me that this guy has been listening to some influencer out there that is adverse to order flow because it's a threat to their own methods of doing things and the courses that they're offering, but they don't really understand the order flows. So then their audience understands it even less. And how do you write? So he's saying like, institutions use both sides. It's like if you have to buy 40,000 contracts, like you're not going to buy 40,000 contracts and you are going to be able to see that in the tape, right? You're using both sides. You can buy 40,000 contracts and sell 40,000 contracts. You're still short 40,000 contracts, right? Maybe what he meant was that you use both limit and market orders. That's true, but you're still going to see that impact, right? So we're just thinking about content that I can make off of that comment, you know. And I was wondering, okay, so do I dive into the whole, this is how an order book works, here's how a large trader is going to execute based on optimal strategies, and here is the resulting things that you're going to see in the order flow when that's happening? Well, I think so. Maybe if I can make it engaging enough, but at the same time, it was kind of like besides the point, because in the video that I was talking about predictors of order flow, right? Like reading order flow is really important because we need to be able to read and understand order flows that we didn't expect and to verify the orders that we did expect are actually happening in the market, right? So we have to understand and read the order flow, but what the point of that one was you should be looking for predictors of order flow, right? Things that are going to tell you the orders are going to come before you ever see them. So it kind of makes me wonder sometimes the comments that you get, because I so often the comments that I get on TikTok don't line up with the content that they're actually commenting on, you know? What's with that? Anyways, so that was kind of why I was a little bit late. I was also thinking, like, should I go and shovel again? I kind of want to. It's been kind of fun shoveling. Doesn't look like it's enough to justify using the snowblower, but I'm torn. Tell you what though, waking up this morning, it was so hard to get out of bed for whatever reason. Like I was gonna sleep through my alarm. I've never done before. Let's read this story from Bloomberg. This is pertinent in my interests. The CME last open outcry bid makes the leap to the post-Labor world. Options tied to SOFRs now outnumber euro-dollar contracts. Clients prefer open outcry for complicated derivatives trades. More than a decade after the labor rigging scandal shocked the financial industry, derivative traders in the CME Group's last open outcry pit are finally shifting their focus to contracts based on the replacement for London interbank offered rates. The number of options on futures linked to the Secured Overnight Financing Rate, or SOFR, recently overtook the corresponding figure for euro-dollar futures that settle at LIBOR rates. The shift in leadership marks a change for the hulking U.S. interest rate options market, a main vehicle for wagers related to Federal Reserve policy expectations and bond market volatility. Yet even as this market steps into the future, CME's sole surviving open outcry trading pit, one of the last ones left in Chicago, is poised to continue being an essential venue for complicated trades linked to SOFR. Morning, Purdue. Transition from LIBOR to SOFR doesn't change the multi-leg nature of the activity, which customers prefer to contact by voice rather than electronically, said Don Wilson, Chief Executive Officer of DRW Holdings, LLC, the Chicago-based trading firm he founded in 1992. Therefore, the status quo is likely to persist. The migration to SOFR futures and options is a result of the, I don't know, is there anything else interesting in here? CME open outcry trading peaked in 2006, the year that the exchange merged with rival CBOT Holdings Incorporated, whose financial products included futures and options on Treasury securities. The trading pits for Eurodollar futures and options and the floor brokers clad in color-coded jackets subsequently relocated to the CBOT's 60,000 square foot trading floor. But by March 2020, when the CME temporarily closed the floor at the onset of the COVID-19 outbreak, Eurodollar options were one of only about a dozen products that were still traded by voice in old-fashioned pits. Trading of the underlying Eurodollar futures contracts had gone exclusively electronics, as had Treasury futures and most other products. Among the CME's roughly 2,100 contracts, only the Eurodollar options still generated enough floor business to warrant maintaining a pit when it was deemed safe to reopen. Floor trading resumed only for Eurodollar and SOFR options in August 2020 in a pit that had been expanded and zoned for social distancing. In May 2022, it was relocated to a space that's less than 1/10 the size of the old floor, which was sold to Commonwealth Edison to house an electrical substation. What? That's so sad. Morning, QJ. That's an advantage, according to Tom Carriedo, an interest rate option market maker at WH Trading. I can hear a lot better the noises only from our pit, which is no longer surrounded by any others. It makes it extremely difficult. CME said it will offer floor trading as long as there's adequate demand for it, and the fact that 63% of SOFR options changed hands in the pit last month suggests that open outcry will survive the transition. During the 5-month period when the pit was closed, stakeholders in electronic trading were hopeful it might never return. Instead, its survival is an object lesson in the limits of computerized strategies. See, it's interesting to me that there are definitely people that want the demise of the trading floor, right? Why is that? Because electronic trading is advantageous to them, right? They can't pull their shenanigans on the floor. Yeah. Interesting. Datadog shares are trading higher after Oppenheimer upgraded the stock from perform to outperform and announced a $105 price target. Oh boy, what's Datadog's price right now? I have to pull up TradingView here. It's not cooperating with me though. Curious, by the way, the 10-year yield is back above 3.5. Chart. D-Dog, right? Oh, okay. Yep. D-Dog. Well, they're at, well, I don't know about that one. So they're at 90 right now. It seems to be mostly in line with the rest of the market. Their price target is 100. That's not that crazy, but it's up this morning. I have to say, at my work, we use Sumo Logic for our logging, and we use other stuff for our monitoring. And we looked at Datadog because Datadog can kind of replace all of that in one package, I guess. And it was just so cost prohibitive. Like, the cost for Datadog is just crazy, man. And I really didn't think that its features and everything were really as good as what we were getting from separate products. So I'm not as hot on Datadog and some of these other stocks that are like the darlings of Wall Street. I think that some of these other guys, like say your Sumo Logic, which I own, I think in the long run could surprise some people. But we'll see how it all turns out. You know, when you're the one that's getting the money from Wall Street, that certainly helps you out, doesn't it? Eventually, I think that some of these guys get bought out, right? Like that Microsoft comes and snatches one of these data analytics companies up. I think Microsoft probably the most likely one to do that. I don't know. Let's just chill for a little bit. The market seems pretty directionless right now. At what time are we bashing? Well, we can do that right now if you want, Lucas. I got one for you. Run it. Where was that? There was one that I thought was kind of a little funny. Okay, so they're trading on an app here on their phone. I don't know what app this is. And they say, how do you avoid these fake outs? Look, it was trading flat. Then we moved down a little bit and it was a head fake and they moved higher. How do you avoid this? Well, here's the thing that I find funny about this. Look at the time. So this is ES futures, but look at the time. It's like 1800, right? It's like 6 o'clock at night. So basically, this guy is trading this thing and doesn't understand that the market is going to start moving when the Asian markets open. Like, I'm telling you, this whole thing about like just follow the charts is so damaging, because you get these retail traders that come in and try trading things without even understanding like the most basic stuff about the market that they're trading. We don't know where we don't know what time it is, but I almost guarantee that move is overnight move, right? Like also when you look at the prices, right? So when were we at 1168? last night. Yep. Sorry, 4060. Oh, no. Yeah, this was like right at the switchover. Like here, I find it on my chart, right? On my chart. You see it right here. Same area, right? So here, we moved a little bit higher before retracing it, right? And that is like around the Asian Open. Anyways, it just irks me so much that like you get people trading and they don't know this stuff. Like, or rather, it's like of course a lot of people are going to not understand things, right? But like the minimum amount of things that you should know before you start like taking live trades on futures, I think that there's too many people that don't cross that bar that end up trading, you know? And I blame technical analysis. I think it's that the proposition that all you have to do is look at past price action to know what's going to happen is the thing that I think keeps so many people ignorant of this other stuff. Don't badge too much. I'm still learning here. Well, don't risk too much, yeah. There's this guy that really, it seems like he's losing a lot of money from trading, or at least he claims to be losing a lot of money from trading, and it's like reading the comments in the Discord are really like, what the hell, dude? Why are you trading live? Do you think he's trolling us? It might be. One of the things I notice is there's somebody that continually comes into our chat and kind of trolls people, right? And we've banned, I believe at least it's the same individual like 5 times. And this guy came in around the last time that we banned the last one. So I'm kind of wondering if it's him, but this guy has been has acted a little bit differently. So maybe it's not him. Maybe it's just, I'm going to bet that one is a kid. So I like all you guys being really skeptical that it's even live trading, I think is totally justified because he's not acting like somebody that would have the money to do it, you know? Notice how ZN had a lot less spoofy behavior since Sam Bankman-Fried's arrest? Wow, I don't know about that one. We saw a little bit of spoofing for like 1 or 2 weeks, and then the market volatility came back and those guys went away. And that had been the first time that we had really seen much spoofing behavior in a long time. So it could be that the spoofers, you know, pulled a few trades and now they kind of have to go and like make new accounts and stuff. Could be they lost money, you know, could have been anybody. I don't know how it would. Has it stopped since Sam Bankman-Fried was arrested? I guess maybe it could have been him, I guess. He really has been arrested. He really has been arrested and they're going to extradite him. The way that whole thing played out, I thought was so interesting because it was like, okay, are you going to come and testify in front of Congress? You know, me thinking this has to be a ruse. Like he's going to come testify before Congress and then after that, they're going to arrest him. And it'll be this great, you know, the politicians will take this victory lap because it'll be this big media event. And then he decided not to come. So they're like, okay, just arrest him. It seems to me like that's what happened. Can't prove it, but kind of seems to me that that's what happened. The SEC also announced some action this morning against some Twitter influencers, yeah? You think he'll start to sing to reduce his sentence? Well, if you're a believer in the if you're concerned about fraud from Tether, Sam Bankman-Fried would be somebody in the position to give them dirt for sure. For sure. And he could possibly have dirt on Binance. I continue to see kind of like issues with Binance, and like headlines, and they temporarily halted withdrawals and this sort of thing, right? Apparently he was looking to go to another country. That's why the arrest came so fast. Well, he tried leaving the Bahamas originally and they stopped him, right? So I don't know about that one. Isn't Binance like the last hill standing? Well, no. So here's the thing. Coinbase and Kraken for Europe are the two most legitimate. Man, does fate not want me to say that? Good grief. I think that Coinbase and Kraken, and then probably Gemini, are like the most legitimate exchanges out there. Coinbase has a stock. I would be very shocked if it ended up that Coinbase was involved in super shady. I mean, I'm sure they'll make mistakes, but if they were involved in super shady stuff, then that would be really shocking to me, right? Binance, on the other hand, Binance has always been like one of the shadiest ones. Like FTX, the only reason I knew anything about Sam Bankman-Fried was because some of you guys in chat brought him up and we researched it that one day, right? And that wasn't that long ago. That like FTX was never on my radar. I've constantly heard things about Binance that Binance came up out of nowhere, and that all of the volume that they claim to be making is just complete nonsense and stuff, right? So and given the way that FTX went down and everything, you would think that he'd be looking for revenge on Binance, right? So that's why I continue to put that name out there, is that's like the next place to be concerned about, I think. I haven't heard of FTX before any of this either, it's true. Whoa, that dropped pretty quickly there in the 10-year, didn't it? Well, liquidity looks a little suspect and the bids are not too strong. Yeah, my lips are really chapped this morning, man. Maybe I'm dehydrated. I'll try drinking more water. My lips get that way during wintertime. It used to be that it wasn't doing it anymore, and then over this winter it's been like every day, right? Like I wake up in the morning and my lips are just peeling off, and I have to, and it's probably a dumb thing to do like while I'm on stream, but I'm ADHD and I just can't stand it. Like, can't help myself. Too much power, too little experience. I think that one of the things that's been kind of interesting about all of this is that Sam Bankman has been particularly forthright and apologetic about what happened, really to the point where I think that if you were Sam Bankman's lawyer, you'd have to be really upset with him, right? One of the things that I constantly talk about and is kind of one of the larger themes that I'm trying to get across to people is that a lot of what we're dealing with here is systems. And what happens is people always want to focus on a person, right? You need a scapegoat. The politicians in particular love to have a scapegoat to detract the blame from themselves, right? You know what was kind of funny is I made a video about this talking about inflation, and everybody's saying it's the greedy companies because they made money from this, right? Well, yeah, that's what you're gonna see in cost push inflation. It's the prisoner's dilemma. Nobody does anything, then everybody's fine and they win. But if one person raises their prices, they're going to profit, and it's going to come at everybody else's expense, right? Everybody else's future profits are going to get compressed because of the price pressures that happens when you get the inflation. So what happens is everybody jumps at the first chance, at the first sign to raise their prices, because they know that if they don't, they're going to be screwed, right? So is it really the fault of the businesses? I say, don't hate the player, hate the game, right? And in this particular case, I don't know if there's anything you can do about the game. If you can have a free enterprise system, this is what's going to happen. And the only thing that you can do is manage the money supply appropriately, right? Which Congress did not do. So somebody comes into that thread and they're like, well, what about the financial crisis? Obviously, you're going to tell me that the banks weren't at fault? Well, they really weren't, if you really think about it. Okay, well, first of all, did they do something illegal? In cases where they did something illegal, then obviously they're at fault for doing that illegal thing, okay? But the reason that the 2008 financial crisis happened was because banks were just following the system that Congress had set up. Congress created a system that actively encouraged banks to get as many people home loans as possible. The most profitable strategy was going to be mortgage-backed securities, and that was all very intentional. And everybody in the industry did it. That's what created the systemic risk. So is it really the bank's fault, or is it the fault of the people that set this system up in the first place? I just don't. It just drives me crazy that the people that put this terrible set of laws in place that created the financial crisis, that they got off like nobody ever talked about it. They got off scot-free. Like, people were more concerned about preventing banks from being able to trade than they were about the laws that incentivized the whole house of cards in the first place. It's just so absolutely crazy and stupid. Like, the thing is that when you guys say, oh, it's both, right? really what you're saying is this, okay? Like, seriously, think seriously about this. This is a moment of self-reflection. Really what you're saying is, if I was in charge, I wouldn't have done that thing. I would have said, this is too risky. We're not going to do that. This is greedy, evil, etc., etc., etc. It's bullshit. You would have done the same thing that everybody else in the industry did at that time, because the reality of the situation was that the system was set up to where you basically had no choice if you wanted to be competitive. There was literally no choice. So is it really your fault for playing the game the way that it had been set up, or is it the fault of the people that set the game up in the first place? Do you get what I mean? Like, the whole thing is that the system, quote unquote, is stronger than any one individual person's decision-making power, right? Because the system basically leads to behavior from everybody involved. Poor bankers, they weren't a victim. They weren't a victim, but I think trying to put the blame on them, what this really is the politicians scapegoating the bankers so that the politicians get off scot-free, right? And you just look at this. It's what happens freaking every time, man. It's what happens every time is the politicians blame somebody else, nothing changes, and nobody ever holds the politicians accountable. And then they go and they do it in some other market. Right? We're talking about how government regulation directly led to the 2008 financial crisis. Right? So in this particular instance, you can't come in and say, well, the larger thing was Sam Bankman-Fried, right? So I don't think that you can come in and say that Sam Bankman-Fried is a victim, okay? Because he did things that were straight up illegal. They did things that are straight up illegal, right? But what I'm saying is that it seems to me that the cryptocurrency ecosystem is set up in a way that basically makes this stuff inevitable, right? So if you really want to learn like the real empirical information about order flow, I would recommend reading Jean-Philippe Bouchot's book, Trades, Quotes, and Prices, Financial Markets Under the Microscope. So do you think he's a fall guy? I think to some extent, yeah. Like, so what's really happening here? Like, think about it. Again, what do you see happens, right? They find a scapegoat. The scapegoat goes down. Nothing actually changes. And the politicians are never held accountable, and they go and they do it somewhere else, right? So what's really happening here? Yeah, the politicians want to have a scapegoat, Sam Bankman-Fried, because they don't want to have to admit that they intentionally didn't regulate the cryptocurrency industry. And they let the regulators say, maybe we don't have to handle that. Maybe that's not our jurisdiction, etc., etc., etc. Right? We set up all of these laws 100 years ago to deal with exactly this kind of situation. And then the regulators didn't enforce it against obvious frauds. Right? Yeah. They absolutely are. They absolutely do want all of the attention on Sam Bankman-Fried so that the regulators and congressmen don't have to take responsibility for letting this get so far. Like really think about it. Bitcoin has been out for like 12 years. How is it that this has continued to go on for 12 years, collapsed literally like 4 or 5 times due to fraud, and they're not sitting there like, oh, we need to do something about this. We need to adjust our laws to make it clear that all of this stuff does indeed apply to cryptocurrencies, you know? Like, you can come in and you can say, look, maybe you can say it's not a security, but all of the same rules that apply to securities still apply to you. That's really what they have to do. If you're going to do a coin ICO, you should have to do all of the same disclosure that you do when you do a security, when you do a new offering. It's just crazy. And how is it? It's just like, really, it's crazy that this has been going on for 12 years. It's not just that it's been going on for 12 years, but that the cryptocurrency market has collapsed due to fraud before, right? It happened with Mt. Gox, happened in 2017. Now it's happening again. And I'll do you one better. I'll put you the link to the book on Amazon. Just warning you, this is like a graduate level math book. But if you really want to understand order flow, that's where you got to go. When are you getting a new mic? Why would I get a new mic? What's wrong with this one? I might eventually get a new new microphone, like preamp bit. The government bailing out the big banks. Well, wait, sorry, there was an earlier comment from Uzi. That's what they were doing, what appraisers were doing, what customers were doing, what banks were doing on top of the government guaranteeing loans for subprime mortgage markets. The government bailing out the big banks was just them fulfilling that guarantee. Well, okay, so that thing is a little bit different. Because the reality there is that there was banks that did not get bailed out, right? Lehman Brothers didn't get bailed out, and quite frankly, maybe they should have been, right? I mean, things would have been a lot better if they had gotten bailed out. Or rather, the 2008 crisis probably wouldn't have been as bad if Lehman Brothers had been bailed out, right? So that one was really more, it was Republicans in charge. Republicans want to have a free market, and Republicans are much more against bailouts than Democrats are. This is the one that is just like really hard to square away, is that Republicans are constantly forced by the market circumstances to do something that they are very much opposed to. Nah, I guarantee it wouldn't be any different. I mean, you get a microphone that maybe has a slightly different EQ profile. I could come in and change the EQ settings, but I'm with your, over the internet, the differences between this and like a Shure SM7B, you're not going to notice. If you have time, can you expand a little on the spreads you use? Sure. I mean, I'll go back to this other subject if people put other comments on it about it that we want to talk about. But if you ask me a question like that, we have to go over it, right? So spreads. So over here, I have some spreads. That is the bottom on these data series here. If I can get my pen to work. Okay. The very bottom. Okay. So, what I have here is different spreads. Okay, so from left to right, we got ZB. Oh wait, sorry. What? Let's do Windows Alt H. I think it is. No, that's not it either. Oh, Windows Alt P was really the wrong one. Hold the boat. That was terrible. I'm so sorry. Oh man, that's so bad. Yeah, sorry. Hold on. I was trying to. Oh my god. Okay. Jeez. Batch. Hey, wait, hold on. What is the right key binding here? Look at all that. Just a couple of CS files for indicators that I made is basically what all that is. Okay, is the system maybe doing a little better for me here? Yeah, okay. So let's fix that first. What I'm gonna do here, I guess, is oh my gosh. Gonna close the workspace. Don't save it. What's going on with that dull wallpaper? It has a grid on it so that it's easier for me to resize my windows appropriately. Back over here to this screen while it's loading up. I need to go here into Power Toys and see what the freaking key binding was, because I clearly forgot it. I would really like a dynamic wallpaper that does the same thing. But like wherever your mouse is, it tells you like the coordinates. I had nothing to do with it being a spread, right? Windows Shift H. Come on. Oh, that's the mouse clicks. Windows Alt key. Oh, I was right. It was just okay. Nah, that's better. That's better. Okay. Let's write that down somewhere. Why aren't they aligned? What do you mean by that? Yeah. Anyways, I wish that there was like a dynamic wallpaper that would like show you when you're resizing things, like what the size of that window is and like where, you know, half and a third and everything is. That I think you could make a cool wallpaper that would be useful and pretty. Okay, so. Okay. So down here at the bottom, we have these spread charts, right? So which spread charts am I using? So this is the 30-year, the 10-year, and the 5-year treasury. So I have spreads on here related to that particular instrument. So I've got the spread between the 30 and the 10. That's called the knob spread. The knob spread is kind of like the heavy mover. Like you can really, if you catch a big trade, like a big steepener on the knob spread is like an insane winner. Okay. Then I've got the 2s and 10s. The 2s and 10s is the most widely watched spread that, you know, when people say the yield curve is inverted. Of course, there are other spreads like the 10 and the 3-month that Fed says is like more indicative, but the famous one is the 2 and the 10s. That's why I have that one up there. And then this one, I have the 30 and the 5. And that's just because I have the 5-year. I can see like what's going on the long end of the curve, what's going on the short end of the curve. So what's going on across like the whole thing, like the difference between the shortest one and the longest one. So that gives me a pretty good idea of what's going on. But when I'm reading things, most often I'm looking at the knob, right? So like right now, because the 2s and 10s can be kind of a little weird sometimes, but I can look at the knob and see that the 30 and 5 is corresponding with it, that we're flattening a little bit here this morning, right? So those are the major spreads that I look at. And the main thing, the biggest thing that I'm going to be paying attention to with the spreads, I don't know if there's a name for the 2 and 10, but what you should do is, if we come over here, I'll pull up a browser window, and we go to Google and we search for intercommodity spreads, CME. You're going to get this interest rates futures intercommodity spreads page. It's going to be your first result. And then if you scroll down here, it will tell you, it will show you them all, right? So the 2-year versus the 10-year note is called TUT, right? And the 5-year versus the T-bond is called FOB, and it tells you the correct ratio to use. So that's how you determine the ratios to set up, right? Never wear a white t-shirt. I always am wearing a white t-shirt underneath everything, no matter what. That's never going to change. So does that answer the question? So the main thing that I'm going to be interested in is which way is the spread going and how does that affect the flows over here? So if the knob spread is steepening, that means you're selling the 10 and buying the 30. So if we're steepening but the overall trend is down, then when I see a ton of buy volume come into the 30-year, that's not necessarily a signal for that we're going to get a reversal and that I want to buy things, right? That flow is probably more related to what's going on in the spreads. Right? So that's why the spreads are so important to keep an eye on when you're doing the treasuries. How important do you think the 6J is to bonds? Oh, you deleted the question. What the heck? Is very important. Okay. Why is that? The largest purchaser of US Treasury bonds is Japan. For a while it was China, but China divested themselves, right? It continues to be Japan, which means that the Japanese currency and demand in the treasury market are going to be heavily correlated. It's not just like the Japanese government that's buying them too, right? It's all of the pension funds and so on and so forth that are in Japan. Okay, so that currency, that's why there's such a strong correlation between that currency and the treasury market. So you absolutely want to watch it, because what you're going to see, what you're trying to avoid with that one, is you'll come over here and you'll be like, okay, I'm expecting there to be some move and it's going to move up, right? And you'll see strong volume come in and it will move up, and you'll see 1,000 trade at each price. And it's like, that's a good trend. That's some order flow coming into the market. And that's everything that I wanted to see happen, right? But then there will be other days where you'll be like, I want to see it come. I think I'm going to see order flow come into the market long. And it just doesn't kind of happen, and you'll see like it ticks up and you think that it's a big deal and like there's volume behind it, but it doesn't continue, and you're like, what the heck, what does it take to get something started? And meanwhile it'll tick down on like literally only 200 contracts, tick down again and tick down again and tick down again on like zero volume, and it just keeps going and it trends, and you're like, what the hell? How does that happen? You get all of this order flow long, it barely moves, but then you get hardly anything on the short side, and it really pushes. And what you'll almost always find in that situation is that when you go over and you look at the 6J, the 6J is heading down, right? So when the 6J moves, the treasury will move, and it can happen on very little volume. So you want to have that 6J up so that you can understand what's going on when you get that move on like no volume. So that you don't get caught off guard by that one, right? That used to happen to me so often. That's why I developed the indicator, and that probably more than anything else is helping me avoid losses, man. It's having that 6J up. Having that 6J up and understanding that the market makers, a lot of market makers are adjusting their bids and offers based on what the 6J is doing as a correlated instrument. Or you can just say like the dollar in general. Let's get rid of the crosshairs. Good intel. Thank you. It is, these are the sorts of things that like, it matters. What indicator? Like my synthetic dollar index, primarily. When I got the synthetic dollar index, that really helped me understand. There's so many moves that I was like, I don't understand why is this moving now and it wasn't earlier, and it always came down to the dollar. This 6J most importantly, but you have to watch the euro too. Curve steepening equals dollar up, dollar down, and why? No. So curve steepening and flattening is not directly related to the dollar, and you could see steepening or flattening regardless of what direction the dollar is going. You could be careful with that, because the things that kind of determine what kind of regime we're in the dollar is different from the sorts of things that determine what sort of regime we're in spreads. So really what you want to understand is, why does the spread steepen or flatten? Okay. And if you go out there and you read about what causes a flattener, right? There's some articles out there that are like, this is what a bear flattener means. This is what a bull flattener means. This is what a bear steepener means. This is what a bull steepener means, right? I think that there's a little bit of an easier way to approach this, okay? When the market is entering into a crisis and the Federal Reserve reduces interest rates, the yield curve tends to steepen. So the way that it works is, at the height of a crisis, you get significant steepening in the yield curve, and then from then on, the yield curve will slowly flatten until once again we get into crisis mode, and then you get the big steepener again. Right? That's what you see. So let's come over here. Chart of 2V10 treasuries. So here's Fred. Oh, come on, you can go back further than that, can't you? Max. There we go. Okay. So here you can see it, right? When we get a recession, the yield curve steepens, and then slowly over time, as the economy does better and better, the yield curve flattens and flattens and flattens. And then you get the recession, it steepens, and then slowly flatten. This one is even better because this was after 2008, right? Steepens during the crisis, and then slowly flattens and flattens and flattens and flattens. Right? It will steepen, expecting short end curve rates, low rates. Yeah, so remember, okay, steepener. Let's just think about it from the perspective of these three treasuries that we have here on the screen, right? So a steepener is going to be buying the short-term treasuries and selling the long-year treasuries, and a flattener is going to be selling the and buying the back. Okay. So if we think that there is going to be a recession and the Federal Reserve is going to reduce interest rates, that's going to affect short-term treasuries more, right? Because that's going to be like they're going to reduce rates, but it's only going to be like that for like a year or two until the recession clears. So it's going to affect these short-term rates more than the 10-year rates, right? Because 10 years from now, things probably not be too different from now. But 2 years from now, they might still be in a recession, right? So the treasuries are all going to move up, right? If things are going awful, the treasury market overall is going to buy, right? And you're going to see the short-term ones buy more than the long-term ones. Steepening, right? That's the steepening that you see during a crisis, right? And then over time, what's going to happen? The Federal Reserve is going to slowly raise rates. You're going to see the treasuries sell off slowly, and you're going to see again those short-term rates sell off more than the long-term rates, right? And that's the general thing that you're going to see, right? No, it's not. It's not short. So when you're flattening, what's happening is the short-term interest rates are rising. Yeah. So this is where it gets kind of funky. This is why I put my instruments up in the order that I do, right? I have videos about this. I have videos about the treasuries and I explain this stuff, right? And I also explain it in the workspace. So my chart, if you look at my chart, it's moving down. So moving down is flattening. So that's the thing that I use as like the calibration for everything else. Moving down is flattening, right? So then over here on my treasuries, I want to make it so that tilted down and to the right is flattening and tilted up and to the left, up and to the right is steepening, right? That's why I have the 5-year on the right instead of on the left, right? And then for rates, I do the exact opposite, right? So that it's still the same directions, right? So if we are flattening, what you're going to see is this one's going to be this 5-year one. This 5-year one is going to be moving down. Sorry. And this 5-year yield is going to be moving up, right? Steepener, flattener, no one is making money from it. No, that's not true at all. Okay, so back to, where did it go? Did I already close it? Well, whatever. Oh, that's funny. I have that. I can just close that. I don't need that window anymore. Oh, I didn't close it. It's over here. Okay. So here's why spreads are interesting. We've had a recession. You know the recession is over. Go flat. And just generally overall, you're going to go flat, right? Think about this. During this whole period from 2013 up until the pandemic, you were making money from a flattener, right? So the general trade is just go flat. Just go flat unless something crazy is happening. And then you want to be out when the steepener comes in. But generally speaking, if you just go flat, your win rate is going to be really high, right? You're going to win and win and win unless it's a recession. And that is why they like the spreads, because you get a really good probability from it. So yeah, people do make money from it big time. Like some of the biggest traders out there are just trading spreads. Steepener equals peak recession. We expect immediate rates to be low and futures prices to be high. Yes. 2-year yields low. 30-year low yields not as slow. Yes. Flattening is what you expect to happen during expansion. And then, yes, eventually you will get to inverted yield curve, which is what tends to happen just before the recession, right? Joseph Wing saying something that is interesting to me. Implementation credibility is whether the market prices in what the Fed is suggesting. If the Fed says it will go to 5% and stay, does the market price it in? The Fed influences the economy via rates, so the Fed needs the market to believe its suggestions to move rates and thus the economy. The market doesn't believe the Fed's September dot plot, and JP Morgan suggests today's dot plot will be more hawkish. The gap between the FOMC and the market will thus widen unless maybe he means Jerome Powell. Jerome Powell does something to bolster his implementation credibility. Bonus chart: market is often wrong because it thinks the future looks like the past. Post Great Financial Crisis, it was always thinking rates would immediately rise, and today it always thinks that rates are immediately cut. It is very bad at recognizing regime changes, which we may be in. I think that's good insight, one that I think that we should already understand. But yeah, orders are what moves markets, and sometimes the orders are very disconnected from both fundamentals and past market action. So what you really need to do is you really need to look at the market and what's going on and make determinations about how that will influence the future orders. Can you expand on my previous mentioned nuance? I've noticed 6J might be consolidating and ZN going lower, and 6J breaks north of consolidation and then ZN runs to catch up. Yeah. Like I very often find in moves that the 6J is the leader, because the 6J is the asset that's actually making the move, and the treasuries are just adjusting accordingly. Right. Whereas, you know, like the golden trade. Right? The golden trade in the treasuries is something really bad just happened that sparks risk off, flight to safety in the treasuries, and you see strong order flow buying in the 10-year, and it just runs and runs and runs. That is the most fun trade you're going to get in the treasuries. We haven't seen it very much because we've been in a regime where the treasuries just keep selling off. And so when you get a risk off move, people haven't been going to the safety of treasuries. They've just been going to cash instead. Okay. But once we get past this, you know, higher interest rates for longer, you know, like say 2024, then probably we get back into a world where if something bad happens, everybody goes and buys treasuries as a flight to safety asset. And then you get strong order flows coming in, buying us up, right? In the absence of that, of course, we can look for the opposite. We can look for the strong sell, but sells tend to be a little bit less dramatic. Sells tend to like fall through rather than come into a big iceberg order, absorb, they push through it, there's like an explosion higher, you know, buys are just more fun. Okay. But yeah, you can take the downside, or you can predict what the 6J is going to do and, you know, chase the 6J. That's not as good of a trade as when order flows are just directly coming into the treasury market, but it's one that you have to watch out for because it happens a lot. The Elon Jut account has been suspended. That's going to cause a lot of drama. Does it actually break their rules? I feel like if you're saying where somebody is without their permission, that should not be allowed. So I think they could justify it, but I don't think that that's in Twitter's rules. That one could be a big deal in the both this whole drama of Twitter and Elon taking over Twitter, that the jet guy got suspended. That's going to be a big deal. It will end up with him having to move home with his mother if Tesla keeps falling. Well, so this one is so interesting to me. So one of the comments that we get commonly when we talk about how it's orders that move markets is a little more savvy people will come in and will say, well, okay, like when you're going on a short time frame, it's pretty self-evident that it's the orders that moves markets. Of course, we have empirical evidence to back this all up, but you watch markets long enough, I think that you can kind of come to that conclusion, so much so that it's kind of like a no duh. Of course, orders move markets. It's it's people putting the orders in that determines what happens. Sure. But on a longer time frame, what is moving markets, right? Well, generally speaking, this idea is correct that fundamentals are going to continue to move orders over very long time periods consistently. And so over a 3 to 5 year time period, the orders will eventually move price in line with the fundamentals on a 3 to 5 year time period, right? But not always. And there are still some very prominent counterexamples to this. One of the best counterexamples, in my opinion, is Warren Buffett. So Warren Buffett has identified an inefficiency in the market that occurs even on a very long time frame, which is that the market tends to ignore value companies. It's more interested in the flashy companies. It's more interested in the Elon Musks and the Teslas that are gathering all of the headlines and are always in the news that everybody's interested in. A lot of people get in that. And so Tesla, when we were in a buy market, Tesla's, PE ratio was absolutely insane. Why was that? Because what was really driving the order flow in Tesla was the popularity of the company, right? And now that Elon Musk has crossed the Democrat establishment essentially by buying Twitter, which is really what happened. Like, I try to be equal in terms of, like, I don't want my political bias to harm your learning, right? We got to focus on the things that are important. But this is the case where this is just straight up what's happening, is that Elon Musk, they were all fine with Elon Musk when they thought that he was a hippie that was going to bring, renewable energy to us. But when he went in and bought Twitter and started saying right-wing things, it was like, oh, he's not actually going to help the liberals, and they started trashing him. And as soon as Elon Musk's reputation had been damaged and half of the country, the Democrats, decided that they didn't like him, the stock price declined because they weren't as interested in it. Because what was actually driving the stock price? It wasn't that Tesla is a different company and that people aren't valuing it correctly and they're going to continue. No, it was nothing to do with that. It was that people were just buying Tesla because of the news, because of attention biases, right? Now it's come back. Of course it was going to come back because he sold a bunch, right? Who knows? Maybe it will come back in a bear market, but I'm going to bet that the all-time high in Tesla is probably in. But will he have to move in with his mother? No, probably not. He's still, I don't think he's the richest man in the world anymore, right? But he's still like, you know, 100 billionaire. So that's probably not going to change. The stock market is a beauty contest to some extent. I really like when you're looking for like kind of an approach of what is the market from that. Really, the market is other people trying to predict what other people are going to do. So from that perspective, it is kind of a beauty contest. It's like a popularity contest. It's trying to predict which stock is going to be popular in everybody's minds. This buy that we've had here was not really accompanied by very strong order flow, but it did move with the 6J. So that's a pretty good example of what we've been talking about this morning. Will it continue or not? I have no clue. It sure happened quickly, didn't it? More sucker bait. Anyways, I'm interested to see what happens with why Elon is going to have to address it, right? Because he said many times that they weren't going to ban him. So I don't know what's going on there. Especially since like the trust and safety team got disbanded and deleted, right? So maybe it was Elon that made that choice. I don't know. I think that for large enough companies that there should be things about moderation that should be codified into law. Like this whole thing that Twitter's trust and safety team didn't deal with the obvious kiddie porn on the platform for years and years and years. Claiming that it wasn't actually breaking their rules is just patently ridiculous. I think that there should be laws out there about that. I think there should be laws protecting people too. I think that a large social media company should not be able to limit your reach or shadow ban you or anything like that without there being a way for you to find out. Which would be kind of a problem because they kind of use the shadow ban to ban bots and not let the bots know that they've been banned, you know? But it's not okay to shadow ban people and then them not know. You know, funnily enough, the only thing I've seen in the last 24 hours in the news about Tesla is that you can play Steam on your Tesla now. So by the way, I don't know why I didn't get the sound here. I should come in here and look at this. Do I not have... No, where's the indicator? Indicators. Light.wave. Light.wave. I don't remember hearing. Yeah, I don't remember hearing the 7:30 start, but whatever. I'd like to see my profile. I've had YouTube do some things to me in the past that's made me think that my channel has been throttled. I don't know if that it's still being throttled and if the video performance is less because of the throttling. I don't think that's probably not the case because my videos do tend to perform in line with the other future specific channels out there. But there have been at least periods where I was hidden from my live streams were hidden from search and stuff, right? And on Twitter, man, on Twitter, it's just like every once in a while, I'll make a comment that like goes crazy and gets a lot of reactions, but I never get followers from it. And I've just found it so incredibly difficult to build any kind of following on Twitter. I feel like I post some insightful information on Twitter and like nobody cares. And I can't imagine why I would get throttled on Twitter, but you know, it's just stuff like that that kind of makes me wonder. It's like, well, did I say something conservative and that kind of limited my reach? Feels like that does happen. Don't know if that's happening to me, but we do know that it's happened, right? Get your vote in for the 2022 Finance Charlatan of the Year. What? Why does Ira explain that, right? The reason that the 6J has so much power over ZN is that the largest purchaser of treasuries is the Japanese government and Japanese pension funds. Okay, so 2022 Finance Charlatan of the Year. Last year's winner was Chamath. You know what? I really don't think that Chamath is a charlatan. I think Chamath is a really smart guy with a lot of really valuable insights. He totally rode the SPAC market for all it's worth, and I think he was genuinely trying to make, you know, good companies and make money from it. Even though he knew that it was probably a bubble, but like, what do you do when you're in that situation? Just get what you can out of it. I don't think that considers you a charlatan. What was it that he said that was false and he knew it was false? Well, anyways, surely Sam Bankman-Fried wins this year, right? Bill Ackman, I feel like Kathy Wood is a charlatan. Is a pretty big charlatan. She does not have a fucking clue what she's doing, and I think that she's lying to people and to get people to invest in her fund. I don't think that it's a case of she just doesn't know what she doesn't know. There's no way that you can be in that position and not know. Kevin O'Leary. Duquan, I forget who that is. That's the Tron guy, isn't it? I don't recall. Peter Schiff is a charlatan too. Like, all he cares about is gold, and like everything that he says is like useless bullshit. Yeah, Sam Bankman-Fried probably wins. There's probably a bunch of other people that we could probably add to the list of a charlatan that's not on here, but whatever. They're only gonna look at the people that are like on TV. There's plenty of people that are on YouTube and Twitter that they really are straight up charlatans. Okay, so this move that appears to have been driven primarily by the 6J, you're getting a significant pullback in the 6J, and so you're getting the pullback in the treasuries as well. Given the time of day, like normally on an FOMC day, you'll get, you know, decent moves in the treasuries. It's like the market somehow knows what the FOMC is going to do and they front run it, sort of a thing. I've seen that a lot, but you would have seen that before now. So I think that today is, or at least this morning, is kind of a wash. We'll be back for the Federal Reserve meeting later, but right now, it really does look like a wash. The good old days of BitConnect. That one is just like, so like, one of the things is that I've been learning with the Series 65 is that each state has an administrator, and the administrator can't prosecute you or anything like that. But what they can do is they can prevent you from transacting business, essentially. Like, they can come in and they can say, okay, you're not allowed to do business in this state anymore. They can put an injunction against you, basically. Or they can give you a cease and desist order, rather. And then that can be used in a court to do injunctions and other legal action against you, right? Why is there not similar mechanisms for like exchanges and securities, etc., etc., etc.? It's absolutely nuts that you can have a fraud as obvious as BitConnect go on for years and years and years and nobody does anything about it. Like the reality of this situation is that regulators never caught up with BitConnect, right? It crashed first. Then they come and they prosecute somebody after things crash. They're not protecting the public. Why is it we protect the public? You know, the laws are just not up to date, right? We put all of this tons and tons of effort to prevent a financial advisor from defrauding the public. But we have these things where people can literally print their own securities and we don't do a thing about it. Okay, Nick Timmerell's got a tweet here. What to watch at today's Fed meeting. Number one, the statement. There have been some speculation by Fed watchers over when the FOMC modifies the ongoing increases language to further or some further increases. Most of them think that doesn't happen today. In December of 2005 and December of 2018, when they thought they might have a couple rate increases left, the statement introduced language saying some further policy tightening would be warranted. Adding that to the statement would therefore be interpreted along those lines dovishly. Number two, there is also an intense focus on the median of officials' 2023 interest rate projection. In September, 6 officials each projected rates ending 2023 at 4.4, 4.6, and 4.9 respectively, for a median of 4.6. Howell et al. Have teased somewhat higher projections today. The question then is whether the median is a shade below 5% at 4.9 or above at 5.1. Analysts are split over this. A wrinkle: if FOMC participants anticipate hiking in H1 and then cutting in H2 of 2023, the 2023 dot, which is as of 12/31/23, won't reveal their peak rate. At 2:30, the focus turns to Powell's press conference, including whether he offers any hints around the direction of travel for the February meeting and how he characterizes the outlook and risk management after two much better CPI reports. Yes. Not just two much better CPI reports, one report that kind of suggests deflation. I think that he's going to have to acknowledge that in some form. Okay, so now this is interesting. The treasuries came back up to the highs, but the 6J was not there with it. I'm not seeing the volume here either. Overall, for the session, the volume in the 10-year in particular is all sell, even though we're at the highs. So the flows, that's something that I read as don't trade. The flows are not very correlated with the price right now. That kind of reduces your probability on trades. So if I was going to do something, maybe I could do some market making in some situations, but trying to make a directional trade right here is probably a crapshoot. Okay, other people noticing that the Elon Jet Twitter account has been suspended. Let's go to Reddit and see if Reddit has picked up on this yet.
Oh, they were shadow banned several days ago, according to Reddit here. The 6J prints like crazy and then buys bonds. Isn't that similar to the FTX token? Well, no, because they're a bank that's legally allowed to do it. So I think the issue here is people think that the immoral thing is printing money. It's not wrong to print money, right? Printing money is a very powerful thing, though, right? That has to be managed appropriately, right? So you can't just let anybody do it. It has to be done at a bank with all of the appropriate risk controls and everything else involved, right? Because the thing is that printing money is not necessarily a problem, right? Because when you print money, it is generally done in the form of loans, right? You give somebody a loan and then they use the money from the loan to go and buy something, right? And that's fine as long as they pay it back, right? So you don't have a problem until the people borrowing don't have the ability to pay it back anymore, right? That's why the bank does all of these things to ensure that you will actually be able to pay back the loans that you take out. So anybody can print money. It's just you have to go through the bank and you have to prove to the bank that you'll be able to pay back that money that they printed, right? So when you do what Sam Bankman-Fried does and you just print money because you want to, and there's absolutely no control over who gets it or whether or not they'll be able to pay it back, that's going to inevitably result in disaster. Right? But printing money is not a bad thing. It's a necessary thing. You have to manage the money supply. Like I said, the big conundrum that we're trying to solve here, really, if you think about it, is that people's plans for the future is always bigger and greater than their actual past accomplishments, right? Most people have aspirations and want to do things, but very few of them have actually been successful at those things, right? So the demand for capital out in the market is always going to be higher than the actual assets that exist. That's why you need debt. And so the debt is absolutely necessary in order to have a large economy. The question is just, how do you manage that debt? What's the appropriate way to manage that debt? At what point have you crossed the line and created debt that's not going to be able to be paid off? Right? That there will be defaults. And the general consensus expectation is that it's at 2 times GDP. Which we're close to. Yeah, Treasury's pushing a little bit higher there, but not being accompanied by the currencies in that instance. Nor order flows. I would be a very responsible printer. Well, I mean, that's the first thing, is that it's not supposed to be given to any one individual person, right? Rather, we have a committee appointed by the president with Congress to verify the appointments, and very clear mandate and rules about how they do it so that it's done appropriately. And I think that system works really, really well and is primarily responsible for the most Excuse me. The most successful period of economic growth in history, primarily caused by the creation of central banking. Effective system. Might have some problems. Seems like central bank is not necessarily good at doing their job. I think that they do it in an appropriate way and everything, but they're maybe not good at it yet. Or they're not as good at it as we probably want or need them to be. You know, I'm looking at this. I don't really see a significant shift in cumulative delta as we've moved up. But on the other hand, I'm not really seeing a whole lot of sell orders or anything. I think I will come in here and clear my 10-year so we can see where we move from here. Send my broker an email to add 6. Were you not getting the data before? Yeah, some people saying that it would be doxing the Elon jet. I agree. That's probably why they were suspended. But I think it's doxing. Do you guys disagree? Oh, here's one. Okay. Wow. Why is the thread on Reddit that has the most activity on this is white people Twitter? What? Light paths are public anyways. I really think, like, seriously, that giving the public information about an individual's whereabouts with when the individual does not want that information to be spread, that's doxing. That's doxing. So, like, if you know, I was on a plane and somebody tweeted out that I was on that plane and I didn't want them to be tweeting out what plane I was on, I think that's doxing. I think that's exactly what the rules were meant for. I think it's kind of dangerous to allow or encourage people to do that sort of a thing. Even if they're using public information to do it, I don't think that they should be able to stream it out on social media. People want to find that information, they're going to have to go find it themselves. I think it's doxing. And that's against, I don't know how Twitter's rules like specifically list that out, but I'm okay with them banning him. I'd rather go to battle with them than alone. Yeah, well, it's really is like, you got, I think one of the, let me put it this way, right? These robots that are putting bids and offers out, how did they decide what to set their bid and offer at, and whether to pull their orders or to take fills, right? Well, one of the best ways to do this is to look at correlated assets, right? So you can look at the other treasuries that are the most closely correlated assets, but those might not necessarily help you. So what's the next best one? It's the 6J. So a lot of the movement that you're seeing in the market is really just the correlations with the 6J, right? So if you don't have the 6J up, you're missing a really big part of the picture. The robot's controlled by a person? I'm talking about the market makers? Some are, some aren't. I mean, there's we shouldn't make blanket statements, right? There's lots of different ways of doing it. People that are executing block trades for others, they will provide liquidity to some extent, yeah. To kind of assist and help them move the market in the direction that it needs to go. They're still pushing. It does kind of look like they're going to touch 115 even, at least, but yeah, some of the comments that I see on Reddit sometimes make no sense. He risks Fauci's safety for spreading toxic misinformation to his cult. So criticizing Anthony Fauci is not a breach of Twitter terms of service. Tweeting misinformation is not a breach of Twitter's terms of service. But tweeting personal information or whereabouts of somebody is. The only reason why I think this one ends up being an issue is because he said they weren't going to do that. He said that they weren't going to ban that account. All orders are facilitated by a prisoner company, I guess, but that doesn't have anything to do with how the algorithm is determining what bids and offers to put and take fills on, right? I'm just saying that some of the strongest market makers, what the 6J is doing is a really important factor in how they determine what their bid or offer is. And so if you don't have a chart of the 6J, you're missing a really big piece of the picture in the 10-year. It'd be very difficult to differentiate between what is noise and what is an actual meta order coming into the market and what is just correlations without having the 6J up, right? This subreddit is so shit. I've never really read this subreddit, but the people here are nuts. So is there gonna be anybody like, what if I sort by controversial? Does doxing someone become okay when you disagree on some political perspectives? There you go. It's doxing. I mean, it's curious to me that that's the one that has the most upvotes. 5 hours ago, I would think that there would be something that's more like more popular. Sort by top in the past 24 hours. White people Twitter is the top one. Facepalm. Enough Musk spam. Don't know. I would have thought that there would have been one on like r/technology or r/politics or something like, I don't know. What time is it? It's only 8:14. So let's hear. Let me come over to my phone. Did they delay school? Because I haven't heard any family over there. Guess not. I'm gonna go check, okay? Man. Okay. So so the kids have late starts, so that's good. Except for one of them has to be there at like 8:45. So I got about 30 minutes. I have to drive them, but there's just so much freaking snow, man. Like I cleared it last night. So there's 6 more inches. It's just not stopping. How long is this gonna go for? I need to come over here to look at the local weather. ASL.com, the top news station here. Weather. Okay, this is expected to continue through Thursday, although today it's only 30% and then 20%. That's interesting, man. We got a lot of snow, man. We got a lot of snow. So I'm gonna go and shovel. Well, no, I'll probably use the snowblower. This one. And I'll keep the stream going here. So we still got the order flow at the very least. But you know what? Like today we got a Federal Reserve meeting and everything, right? So but I'll be back before the stream is over. So if you have any questions or insights or anything, you keep putting them in the chat. I'll cover them when I come back. All right. NASDAQ killer can hold it for 2 days. Well, okay. Is that a... I don't know the longest I've held it for is. But I was clearing the driveway. I know that the snow is probably a thing that you're probably not too familiar with in Morocco, but yeah, we had to clear the driveway so that my wife will be able to get back up it when she gets back from taking the kids to school. Well, I'm really impressed, guys. I was gone for like 30 minutes and we didn't lose any viewers hardly at all. That's pretty crazy. Well, the treasuries did touch, well, actually no volume went through at 115. It went offer, but it did not trade. And then since then, I guess we've fallen back a little bit. I do see a little bit of, yeah, still pull back in the Japanese yen. So interesting. It does look like, I mean, I had tried to predict a bias today, which I didn't do, but I think that if you had pulled my leg, I probably would have guessed long. I mean, I think that there's probably some people hedging against any potential hawkishness, but I think that very clearly the longer term trend here in treasuries is up, that like peak hawkishness is past us, right? Could be wrong. Like the risk here is that the inflation comes back, that as soon as the Federal Reserve pulls off the gas pedal, that everybody goes crazy and the inflation comes right back. But today, things looking pretty okay. Things looking like, you know what, maybe they made some mistakes and stuff, but they handled the aftermath of that pretty darn well. Maybe you do get a soft landing. We'll see. Very few people predicting a soft landing right now, but probably you're starting to see a few more. Let's see here. Anthony Crudelli. FOMC day used to be the most sought out day to trade when we were in the pit. Nowadays, it's the most difficult day to trade. As I've stated many times before, today is an overreaction, tomorrow is the reaction to today, and day 3 is when we have confirmation in the next. Yeah, it takes the market a few days to sort things out, that's for sure. The oil market is on a mission to break both bulls and bears. Are they taking that? Well, they took a little bit of a beating this morning. Yes, it did. From a high of 77 back to 75.6. You know what I think is kind of interesting, though, is that when you look at oil on a longer term chart, it's like this was super ugly. This is super bullish. You really have to pull back on oil to really understand what's going on, you know? Well, when you really pull back, then it's like, oh, look at these moves. Ew. The 21st, I don't remember that one. That's a pretty nasty, hard reversal, isn't it? I kind of enjoy shoveling the snow, to be honest with you. I think the snowstorm that we get in here today in Utah is a little magical. Like, it is very, I mean, you can see it with my lips, right? It's very, very dry snow. It is powder. I don't have a snowboard anymore. I should go get a snowboard. I should be on the mountain right now. I should be skiing right now, man. You don't get snow like this every year.
The skiing's got to be freaking amazing right now, man. Kind of makes me feel sad to think about. I haven't skied in like 15 years. Well, let's see here. We got about 10 minutes before I got to get going. Let's just do a quick kind of scan of the news and so forth. Ron Paul, the mother of all economic crises, will lead to social unrest and violence. Yes, if it happened, but I would not trust Ron Paul for whether or not an economic crisis is coming. WTI tumbles after massive crude build. Gotcha. There's the Twitter account tracking Elon Musk's private jet suspended story. The foghorn is blowing. There's definitely been some really bad economic numbers lately. Let's put it that way. Do you think the market could back off risk after yesterday's optimism when they realized CPI data won't change what Powell already decided to do? So I think that the action that we saw initially off of the CPI, I don't think that has to be premised on the Federal Reserve changing their decision tomorrow at all, right? What this is really about is, do you have to raise rates substantially above 5%, right? So you got to remember that what really matters in terms of controlling inflation is current financial conditions, okay? So the Federal Reserve raising interest rates helps tighten current financial conditions, right? But if something else happens and comes in and causes interest rates to lower, that will ease current financial conditions, right? So if you come out and you say, well, we think that in May we're going to reduce interest rates, if you actually outright said that, then the Treasury market would probably buy, and that would ease financial conditions, and that would be counterproductive to what the Federal Reserve is trying to do right now, right? So similarly, if you came out and you didn't do the 50 basis point hike, that would substantially ease financial conditions. So if you think that the current financial conditions are just right, and I think that there is a strong case to be made that the policy has been effective and that we just need the interest rate to stay here, and ensure that we don't get like another bout of inflation and we just kind of have to grim and bear it for a year, right? Then you're not going to change anything tomorrow. You're going to do 50 basis points. You're going to try and make the press conference be as uneventful as possible. Like this one's going to be really interesting because Powell really does try most of the time to not move the market, right? Like last time around, he moved the market, and it was because they misinformed him, right? They made it seem like that the market was really, really rallying on him, and so he kind of smacked them back down, right? But really his intention is to not have much of an impact on the market at all. But this is a situation where I think that there's going to be some things that he's going to have to address that are going to move the market. And so we just kind of have to see how that all plays out and how the market trades it, you know? So I think that the optimism off of CPI's data doesn't have to be premised on the Federal Reserve doing anything differently, right? I think that it means that policy is working, inflation is coming back down, and if anything, the Federal Reserve has to back off and start lowering interest rates sooner than anticipated, or maybe the market is right that they have to lower interest rates after February, you know? And if that was true, like just think about that timeline, right? If the Federal Reserve raises in December, let's give them the benefit of the doubt. February they raise rates, but then the next meeting after that, I don't know which one it is. If it's going to be in March, I think it's in March. They reduce interest rates, which is kind of what the market has been pricing in anyways. Okay, if that's really what happens, and then after that the markets buy and we recover, okay, that would mean that we already saw the lows in the S&P 500, right? If that's really what it means, then all of the buying yesterday was absolutely justified, even if because I do think that what we got right now is kind of like we might have seen a short-term high. I think there'll probably be some rallying in December, but I don't know if it's going to be as good. But then in January and February, I'm a little bit concerned for the markets again. I think that somewhere in there's probably going to be a bull route, right? I don't know if it'll make it to new lows, but there's probably going to be some bearishness in there, right? But when you look at the timing of it all, it's like, well, there might be that one push further, but then that's probably the bottom, right? One of the things I keep seeing is that people keep posting this chart that like compares current market to the 2008 market, and they're saying like, oh, okay, yeah, in 2008 we had a little bit of a rally here too, and then it rolled over, right? But it's a different situation, man. Like the time period that they're talking about where they moved lower, the reason that it moved lower is because Obama's term started. That's why it moved lower. So why is it that we would move lower here in this situation? It's entirely possible that we've already seen the lows. Entirely possible. I don't know what the probabilities are, but it's a possibility. Did Reddit change their font or something? Can you genuinely get stop hunted? No. Well, the market does it naturally. Yeah, there you go. This is what I was trying to. So when OpenAI, or sorry, ChatGPT came out and I started messing around with it, like I started playing around with it. There's some weird things that you can do to kind of sometimes get around the sensors and stuff, but not generally. And I was sitting here thinking like, okay, how can I make money from this? And I think that the best way to make money off of this would be to make your own ChatGPT robot that is allowed to do porn. That's where I think the real money is, you know. But the code is not open source. And here you go. Here's a story on the AR subreddit that talking about it. Betacharacter.ai. Because what people will do is they'll make like they'll make up erotic stories about, you know, certain fictional characters and stuff. I think that there would be funny stuff that you could do with it. Well, there's my $1 billion idea for you if you want to become a billionaire and you go and recreate ChatGPT and make it not safe for work. Oh yeah, so I kind of lost the plot here. Was there anything other than that? Visualizing the amount of U.S. taxpayer dollars going to Ukraine. Oh, jeez. Well, anyways, I think that's all we got. So it's Well, I'm going to wait for the ding. I'm going to wait for the ding. I want to hear the ding. There we go. Oh, you guys on stream probably don't hear it. All right, guys. Well, I'm going to get going. I will see you for the Federal Reserve meeting at 2 o'clock Eastern time. We'll stream it live in the meantime. Stay excellent, team.